All right, everyone, good morning. Thank you for joining. Hope that some of you guys got a chance to take a look at the 4-hour stream I did yesterday with Yuri about Ukraine. Going to do some more on those in the future, but for now I'm going to go back to some Bitcoin valuation methods. So we'll look at that right now. I'm going to show the price to sales model. I had this model on my website first back in 2017. Had a bunch of different models up there. It was a little bit hard to maintain with my level of coding skills at the time. It's gotten better up into into present time, but that was about 8 years ago, and this model, as far as I can tell, is not really used by many, and I'm not quite sure why, because it's actually a basic model for finance. All right, it's called the price to sales ratio. It's very simply, if you take the market cap of a company and you divide it by the revenue, you rolling trailing 12-month revenue, you get a ratio, and from that ratio you can just understand if something is undervalued or overvalued, all right, relative to the past or relative to relative to other stocks. Unlike the PE ratio, however, with the price to sales ratio, you cannot compare it across industries. All right. So the PE ratio, as it's after expenses and it's a pure on, investment multiple. All right. What are your earnings? All right. How many times your earnings go into your price of the stock? Price to sales is before expenses. And if you're before expenses, it's not comparable between industries. That's an important thing to understand. Okay. So Bitcoin has a price to sales ratio. It's very simply the market cap divided by the trailing 12-month revenue. And what is that? Well, it's here. Okay. Now, remember, Bitcoin is a $2 trillion market cap. Okay. So it's enormous now compared to where it's ever been. Okay. We're around all-time highs, of course. But the revenue for miners, and this is an academic calculation. This doesn't include, any hedging or any sort of merged mining that miners do on other chains. This is just a very academic calculation of the Bitcoin blockchain. It's just trailing 12-month block reward. All right, so that is new coins that come into the system. As we know, it was 6.5, and then it just went down to 3.25 last year. And so that's the block reward. All right, comes out every 10 minutes. And then it's also miner fees, of course. All right. So what you do to get this number, this is in dollar terms, is you take that, I'm calculating it every day. You take that rolling gross miner revenue and you put it in dollar terms based on price at the time. Okay, so you get a curve that looks like this. It's not huge, all right? Even till this day, it's not huge. We topped out back in January of 2022 at 16.7 billion, right? Remember, Bitcoin currently 2 trillion. We topped out at 16.7, 16.8 billion in January of 2022. Big fall during the FTX debacle and everything else, of course, as we do. Go down. We're going back up now. Interestingly, from the launch of the ETFs last year, we've just ground higher, which is a totally different way than it went before. Before it was, and of course this takes into the account the halving as well. All right, so block reward halved here. And because of that halving, it's very interesting that you see in dollar terms, it sort of levels out and it just grinds higher at a higher price. All right, so there's many things that are happening behind this calculation, but at the end of the day, just envision this is new coins and fees on a rolling trailing 12-month basis, and every day you multiply that amount in Bitcoins by the price. Okay, so I'm not saying this is exactly what Foundry and all the miners, all the different pools together in aggregate mined, but it's a nice smooth figure that we can run a multiple from. Okay, so we're at academically, Bitcoin's a $15 billion industry. All right, how much is the gold industry? It's a $200 billion industry. Okay, roughly 100 million ounces a year of gold are mined. So it's actually closer to 300 billion now, 2,700, 2,800 bucks an ounce, getting to a $300 billion industry. How much is the oil industry? It's a $1 trillion industry. All right, so just for reference, just to understand the markets. All right, look at revenue of any other, it's all about revenue. It's all about covering your costs on an amortized basis, paying, keeping the lights on, paying for electricity, of course, all these things. That's very important for Bitcoin. Electricity is a much smaller expense, as we know, for, most other companies in the world. But that's what you got to be thinking about here with this number. This is miner revenue, which is very simply block reward plus fees. All right. So Bitcoin's only a $15 billion industry, if you look at it this way, compared to, again, a couple $100 billion for gold, $1 trillion plus for oil. All right, so what am I comparing it with? As I said, this is trailing 12-month network revenue. As I said at the beginning, to get to a PSR-like metric, a price to sales-like metric, you're going to look at market cap. Of course, we can do the exact same multiple by price. We just look at the Bitcoin price, and then we take this revenue number per coin. You'll get the exact same multiple. I'm just showing you market cap here to calculate it. All right. So remember, $2 trillion market cap. How does that look on the chart when we draw it? Pretty wild, huh? The market cap of this nascent, still small, new digital money dwarfs the ongoing revenue that miners earn. It dwarfs it. All right. Trailing 12-month revenue, tens of billions. Now, market cap, a couple trillion. All right. So we're looking at market cap versus network revenue now. Now, let's draw the multiple. It's going to be a black line on the right-hand axis. There it is. That's the PSR. So here, we can start to understand some valuation points. All right. I remember tweeting about it when we got up to a PSR over 100 for the first time in 2017, December. Okay, you could find that tweet. Signal, pretty good signal at the top. It's very hard to tell which one it is, right? Look, in 2017, we went to here, and then here. It's hard to exactly tell, but it's definitely when you get above the all-time averages, you're going to know that you're running hot. All right, then we go down and down again. 2019 little bump. It did springboard a lot, and then of course here's the interesting thing in my opinion with the PSR multiple compared to other multiples. Let's get a better zoom so the tooltip isn't blocking you. The double top in 2021. Notice how the PSR doesn't get fooled here. All right. I'm not saying that this is for sure. This is just one model. There are many different models, as we know, but the PSR picks the first top to really show, all right, Bitcoin is perhaps getting above its skis, over its skis when it comes to valuation versus what the miners are actually making. All right. And then the second top, of course, remember, we got a higher revenue churn now taking into all these past prices over a trailing 12-month basis. So it doesn't look as extreme. It's still high, 79.80. But it's not nearly what the top was. And then we go down from there. So it's kind of an interesting thing if we want to think about long-termish type trends around tops, is that this thing typically, not always, but it typically has not double topped. All right. Of course, we have this, did double top in 2013. And this is when, again, the denominator, which is the revenue, is so small. It's so absurdly small that, it was allowed to double top again with just, gigantic growth in price in 2013. So it'll be interesting to see if we ever have, such a huge surge in price again. But again, remember, as a price level, of course, the price didn't double top. It's just the PSR double topped in 2013. All right, so the price, remember we hit like $200. I don't have the price here. This is market cap, right? So $2.6 billion market cap. This is showing you in April 2013. Falls back. Then we get to $11, $12 billion market cap in December. All right, so the market cap can go up 6x, and then if the market cap goes up 6x, then okay, maybe the price to sales will balance. But I think it's very interesting that when we have the price itself or the market cap itself do a double top, the price to sales ratio is not fooled. It says, well, actually, this doesn't look as sustainable. Perhaps we're going down into a bear. It's not guaranteeing for sure that we're keeping into a bear. People would be sad to miss this top. All right, if you had tried to time all this and sold your Bitcoins here or something or here. So I'm not saying this is easy. I'm just saying this is an interesting way to look at it. All right, then of course we can look at the percentile bands now and see what we can do here. So the relationship of the multiple is something like power. It's not as great of an R squared as the multiple that I've always gotten in the past with price. All right. But it's a decent relationship. It's something like 67% R squared. I'll show you it in a second on price. But let's put it on log scale, the right axis. Whoops. So we can see the bands and a little bit more, just a smoother way to look at it. Okay. So we see now, remember, I run my bands here on multiples. This is not based on a quantile regression like my buddies Plan C and Cena have done from the Best Bitcoin data group. I run this on multiples over the trend itself. All right. And I'll talk more about that a little bit in a second. But you can see some boundaries. All right. I'm looking at the 98th percentile in red and the 2 or the second percentile in blue. All right. So wherever we get close to those bands could be either buying or selling opportunity. All right. And as we know from 2022, 2023, we've been grinding higher in price, market cap, everything else. Let me put, so anyway, to continue on where we are with the PSR, we're getting high, but we're not at the, very top echelons of this band. So a 98 percentile power curve PSR ratio would put us at 280x. That is, market cap is 280 times the trailing 12-month revenue of miners. 280 times. That would be a 98 percentile move. Where are we right now? 135x. Okay. So what you can see from that ratio is a potential movement in price if we have a bull blow off top. All right. And obviously what is it? It's double something. A doubling of the PSR today would take us to 260. That takes us very close to the red line. Okay. So that's where you can find some value here in this model, or some valuation benchmarking, valuation metrics of this model. Again, to remind you, if you're seeing these PSR numbers and you think they're kind of wacky or high, and they are, look, let me put this on log scale. All right, the left axis, the market cap. All right, so log scale on the left. This obviously looks like the Bitcoin price in light green, and then the dark green, you can see it better. Let me take off the PSR stuff. You can see it better here. All right, but it's still way smaller. We got a long way to go to develop this industry, to be at Wall Street levels, gold levels, oil levels of commodity type mining. Okay, to remind you, gold $200-300 billion industry a year. Silver over $1 trillion. Bitcoin, miner rolling trailing 12-month revenue, $15 billion. All right. And again, this PSR will not translate into other PSRs. If you do a PSR of Apple market cap or Tesla, probably way even worse, you're going to get something like 3 or 4 or 5 or 6. I'm not even looking at it at the moment, but you're going to get something very different. Very different. All right. Apple, a 1 PSR, all right, if Apple is running a $3 trillion market cap, a 1 would be $3 trillion. That's obviously insane. But a 10 PSR in revenue, a 10 PSR would be 300 billion. Okay, so if Apple's a $3 trillion market cap, a 10 PSR is 300 billion in revenue, and they're probably doing more than that. I'll check for you. But anyway, this isn't the only chart I'm going to show on this, but I've been following this a long time, and I do think it's interesting to show where we're overheating, and it's kind of grounded in fundamental data, right? Because mining, of course, is a fundamental, real industry now that has real costs. Of course, chips and electricity is the biggest cost in mining, but it has real costs, and it's something that people can generally understand. All right, so Apple, just FYI. Do they even have PSR listed in TradingView? Let's see. Give me a price to sales. Yeah. It's about 10 actually. Apple's is about 10, 9.78. PE of 40, price to sales of 10. So whatever it is, 300 and some billion for Apple. They're just showing me the multiple. So you look at Bitcoin's PSR at 134, you might be thinking, whoa, that's insane. That looks wild. I'm afraid. Whatever. That's just way too high. Think about what we're talking about here, what I said. PSRs do not translate across industries. All right. PEs do. And finding the PE for Bitcoin miners is very difficult. Right? For the Bitcoin network is very difficult. I'd have to find the balance sheets or know the balance sheets and the income statements of every single miner. Not all miners are public. It'd be more difficult. But as far as a valuation metric, you can still do it. And remember, this 140 PSR, the black line, is not applicable to tech stocks or to automotive stocks or any other industry because it's pre-expenses. It's before expenses. It's just revenue in the market cap. Same with automotive versus tech. Automotive stocks versus tech stocks, the PSR is not applicable between them. You cannot compare industries. So that's an important thing to keep in mind with the PSR. But you can certainly still use it as a valuation metric. All right. Let me know if you have any questions about that. Here is, so this is the PSR on market cap. Now let's look at it directly on price. All right, directly on price. All right, so here's the old price curve. Everybody knows, everybody loves log scale. Let's put the ratio up here. This time it's in orange. Right-hand axis again. Same metric, same benchmark. PSR. All right, we're about 129. Now let's regress through the PSR itself and show you how these percentiles look. All right, so here's an actual regression. Not great, 68%, but it's still the power curve. All right, like most things in Bitcoin, it runs in power, not in exponential, in power. All right, and let's do the 2 percentile and the 98th percentile bands. Okay, let's put this on log scale on the right. This linear scale kind of helps just to see. Actually, linear scale is better than log, all right? Because I had this on log, looked kind of close to the top end. Here you can kind of see how wild a doubling looks and potentially how far we have to go if we blow off, exceed market expectations, the Trump Sovereign Wealth Fund and the Trump Strategic Bitcoin Reserve kick into full effect in the next few months, whatever. Again, it's not all about valuation with me. Withdraw your coins. Do not leave them on exchanges. I'm happy to say that. Always say that. Use multi-sig. Use all the tools available. But if you want to understand where we are relative to past cycles, fundamentally, I do think this is an interesting way to look at it. And on linear scale, we look much closer actually to the, and we are much closer to the trend line than to the 98th percentile, perhaps blow off top line. Okay, so 135x is our PSR at the moment. 75 PSR is the all-time trend. All right, so we got well above that all-time trend in 2017. All right, remember the trend grows. All right, so that helps us. In 2017, the trend was only 25, 26. So that helps us understand this. All right, so we got basically 4 times over trend in 2017. Okay. 2021, how many times over trend did we get? 3, close to 4. Yeah, 4. All right, basically. I mean, roughly 4, between 3 and 4, 3.75, call it whatever it is. Over trend when we blew off the top there. And then interestingly, remember we don't really worry about the second top here. I'm not saying this that you need to sell your Bitcoin when this thing tops off. Always do what's ever best for your family, never financial advice. I'm more of a hodler than anything. But if you want to try to ape in and ape out, maybe this is a helpful tool, but never financial advice, right? So, also, unlike the old power curve, there's another interesting thing about the PSR. Because the mining revenue seems to grow continuously in a pretty fast clip. Unlike the old power curve, the power curve we can spend, this is just the old power curve on price, right? I first posted this in New Year's of 2018. You can spend a lot of time under the power curve, a lot of time. Okay. Getting above the power curve is usually hot. All right, let's go back to the PSR. It seems that we spend more time over it here, right? Specifically with the puking that we had in the end of 2022 and in 2023. It's an interesting way to look at it. It's a different way to understand where we are valuation wise. Like the point is, this tells us that fundamentally, as long as we're staying with the trend and even over trend, the growth of Bitcoin mining, certainly from an incentive, a reward perspective for miners, keeps up with the market cap. All right, I'll say that again. The fact that, we spend a lot of time, certainly we have some deep dips, deep retracements, deep drawdowns under trend, all right? We've had them. But if you look at this, maybe log scale will help us. Let's put on log right. If you look at this over, I should do the calculations because I'm not exactly sure. But it definitely seems that unlike, the crypto winter, let's go back to price itself. We spent from January 2015, all right, so it's basically the end of 2014 to mid 2017. Okay, so that's 15, 16, half of 17, 2.5 full years. Under price trend in power curve. Here, on the where we bring in the fundamentals of miners, we can spend, quote unquote, only, it's mid 2014 now, we start to go under and back up already by end of 2015. Of course, we bounce under a little bit, but understand that point as well. A year and a half compared to 2.5 years, and we're already back at trend. It tells you something about the network. It tells you something about the growth of Bitcoin mining, the interest, because market cap is an abstraction, right? It's a helpful abstraction. We multiply coins outstanding by the price. That's great. But miner revenue, something that is coming out every day and they need to pay their expenses, to keep the lights on, to buy new chips, to reinvest in infrastructure, all the rest. Miner revenue is a daily headache for people that are plugging into the Bitcoin network, all right? That are trying to keep the network secure. It's a daily headache. So I find it interesting that this multiple spends, if not equal, but even maybe a little bit more time on top of trend, all right, which shows you that it's really hawking the trend much more than price, all right? So again, this is not, all right, so again, we went already up back in mid-23 on the PSR over the trend, and it's not a fantastic trend. It's a 2/3 of the time better than the average R squared of 68%, but that's certainly not bad. Again, this is a wonderful trend for price, 96% R squared. But looking, we didn't get back above trend price-wise until this year, ETF FOMO. Whereas we were back above trend a full year. Wait, does that? Yeah, right there, orange. A full year before for the PSR. All right, so what does it mean? It means that the miners, the interest that miners have continues to grow with this trend line, which itself is growing. All right, and it's much more sticking around the trend than the price curve. The price curve can take these long, slow dips, corrections above or below trend. All right, so it's another derivation of a valuation metric. It's complicated, but I think that at the end of the day, it's a good fundamental thing to see where we are. Okay, so again here, log scale. Let's take it off log scale. Actually, it's better. PSR roughly today. All right, end of January, February 2025, 140. 135, isn't it? Yeah. 135. There we go. 135 right now. We're going down a little bit, as we know. Been hovering around 100,000, and then we've gone down in the last couple of days. If we doubled the PSR, all right, that is the miner revenue divided by the market cap, we doubled that multiple, we'd still be under the 98th percentile band, and we'd have a little bit more room to go still. So doubling would take it to 270, but not much. We'd have not much room to go, but you could double. All right, so 280 is the 98th percentile, and I'm not saying that's the be-all, end-all number that is going to signal blow off top. Not at all. I'm just saying as a warning, something to think about. We could double the PSR from here today. That means basically doubling market cap, doubling price. Okay, that's the only way we can put this into a forward projection. Unlike the predictive power of a price regression on price, there's not really predictive power here. There's just warnings, right? We can only look at the past to infer what a potential blow off top could go. Okay, so assuming we're going to blow off here at the end of 2025, which a lot of people assume this because it's the 4-year cycle and we got a lot of tailwinds from Trumpistan, then maybe a doubling of price from here is a decent thing to think about. And this lines up, of course, with other models as well. So maybe 200K. And of course, this thing goes up as well during the course of the year. So if I take this out to December 2025, the 98th percentile is 307. All right. And the trend line itself is only 82. But again, even that predictive power is it's a harder thing to quite understand. It will imply still a higher price still, right? Let's just say 5-7% more. It's 300x. I'm looking at the 98th percentile band, 306x divided by 280x, something like that. What is it? 9%. 9% increase. So it could be a doubling in price plus a little bit more, 10% more. or could be way over that. We could go a bit higher still. But this is one of my original valuation metrics based on traditional finance, which you can do for Bitcoin. Bitcoin certainly has a network-wide market value, and it certainly has a network-wide revenue number for miners. And that number at the moment is only, quote, only $15 billion. It topped out at $16.5 billion in 2022, almost $17 billion in 2022. Now it's only $15 billion. All right, so again, gold, silver together for sure, $300 billion market. As far as miner revenue, those new ounces they pull out of the ground, then they sell into the marketplace at market price, $300 billion. Oil, trillion and a half dollar market. Easy. So that is the Bitcoin price to sales ratio. Going back to the old power regression, which I've shown many times here, this is just the 96% R squared. Very simple, one independent variable versus one dependent variable. This gives us a more predictive power. We can look out here now on the trend, about 125K for the trend at the end of 2025. And again, where are we right now? Right on trend. So even though we can stay under trend for deeper, for longer with this one, when we pass above this historically, you tend to go pretty quick. Not always. 2019 we didn't, but that was not during a 4-year cycle, right? Year after halving. That was not. Here was. Year after halving on the 4-year cycle. We usually tend to go pretty quickly above. This time, history never repeats exactly. It rhymes a little bit. This time we've been, because of the ETF FOMO, all right, in a year ago, March, April 2024, we really pushed it, all right, perhaps more than we traditionally would have. All right, remember, that was like 10 years of political backlog that the SEC did not approve ETFs. So this could make good sense that we really pushed it here. Backed off. Now we're going up above again. And, we're right around trend. I'm not saying we're on track to just blow it off. Maybe we'll have a big retrenchment here. Some of the Elliott Wave guys are saying we're going back to 80K. I don't know. Maybe we are. I have no idea. I have no idea what happens in the short term. Based on history, it certainly could happen. Could have something that looks like this. Just price-wise, just directionally. But typically, when we go above the power curve on price in time, we move quickly. Something to keep in mind. Remember, Bitcoin is not exponential. I've showed this 5,000 times, but I'll show it again. If Bitcoin was exponential, if Bitcoin, the system, was exponential, it would move like this. There's no way. As much as I would love it to happen by the end of 2030, the power curve predicts $550,000 for Bitcoin. If we were on an exponential trend, that would be $40 billion per Bitcoin. Sorry, 40 million. There are some other curves I can get to that are giving you 40 billion. But 40 million by the end of 2030 would be amazing, be absolutely amazing. I don't see it based on the way that Bitcoin has been adopted. The FOMO, but also the fear in the marketplace. Expect a lot of quantum computing, encryption, FUD coming in the next few years, even though quantum would totally destroy every other encrypted system in the world. All the NSA, CIA, FBI's databases, all your bank accounts, anybody could log in. Any hacker with quantum computing could log into your bank account at any time, let alone all of those encryption models would be broken. Of course, the FUD is always around Bitcoin, that Bitcoin's encryption would be broken. And of course, we can upgrade Bitcoin, File Adam back, and plenty of the people in the space that talk about certain ways to do that. Perhaps without even a soft fork, as I understand. So, but we do get crazy on Exponential. We get to, $1 billion per coin if we are on the exponential trend line by 2034. So I think the nail in the coffin will we'll probably have to wait till 2034. Again, I would not be disappointed if we were on Exponential. I say that 1,000 times. But if you want to be realistic, you want to look at what actually happens with the data. Exponential growth is incredibly strong. Yes, it is true. Gold, silver, oil, the S&P 500, bonds, stocks, everything in the markets move in exponential function, in exponential form, precisely because of interest rates, which are an exponential function, a compounding function. Bitcoin does not. All the things I just listed, all the other traditional assets, gold, silver, stocks, they move in a very slow exponential function over time. All right, couple percent a year, compounded. All right, stocks even 10%, 10%. The 50-year average is 7% without reinvesting your dividends, 9% if you reinvest. But since the global financial crisis, it's like 12, 13% per year compounded. So it's a decent clip for sure, for sure. But remember, the slope of this Bitcoin curve, the solid green power curve, at the moment is 45% per year compounded. It's true it declines, but it's still 45% per year compounded. So very important to keep that in mind. Always, I show this almost every time. I'll continue to show it. You go to my top money assets on my website. You can see how Bitcoin is comparable to only base money in the world, available gold, available silver. You can see that there. If you want to compare it to stocks, we can see that there. We're number 6 in the world. And then if you want to look at the difference of how the power curve works, firstly, you have the interactive power curve here. You see it on when it's on log. When we're on log, it's a straight line. That's how we know we're in power. Bitcoin is clearly in power. All right. And then here, this is how you know that it's different than exponential. First of all, the R squared is fantastic, 96% R squared. But it doesn't have a fixed doubling rate. If Bitcoin had a fixed doubling rate like gold, all right, 1.8% per year means it doubles every 40 years, okay? We would observe that in the math. We would statistically observe that. We don't observe that for Bitcoin. What Bitcoin has is a power rate, so it means it's a straight line on log, all right? And what that means is for every 12.8% increase in time, increase in days of the Bitcoin system, of the life of Bitcoin, you will double. Okay, so I'll repeat that again. For gold, stocks, everything, it's exponential growth. How do we know that? It's constant growth. All right, so gold, 1.8% per year. That's stamped in, constant, doubling every 40 years. That's what we observe in the gold markets. Silver is actually coming out slower of the ground than gold, much to the chagrin of the gold bugs. Again, I don't care about silver. I don't hold silver. I don't own silver. I don't care. I'm just telling you, gold has a worse stock to flow than silver, so keep that in mind. Bitcoin is not like that. Bitcoin is a network. It's growing. It's being adopted. So what we can observe for Bitcoin's doubling, which is the trend line here, this black trend line, you can see it in the third column on my website. When does the trend line double? Let's analyze when the trend line doubles. It doubles over an increasing amount of days relative to the time that it's been active. Relative to the time that it's been in existence, Bitcoin will double according to a schedule that is an increasing amount of days, but always proportionate to 12.7%. All right, so it doesn't matter where you pick it on the curve. You can see this very clearly on my website on this table. For every 12.7 increase in time of the life of Bitcoin, the curve doubles. And another way of saying the price curve, of course, is adoption. And that's where I think what we're really observing here. It's not necessarily the protection of your purchasing power, even though I fundamentally agree that, of course, Bitcoin protects your purchasing power way better than any other asset in the world. And it's a blessing from Satoshi, for sure. It's a wonderful invention. It is more now about adoption, all right, about the world understanding it. That's what you see in price rather than a protection of purchasing power, okay? Because if everybody in the world goes into Bitcoin tomorrow, then clearly we would have hyper Bitcoinization. We'd have an incredible amount of price appreciation, and that would be it. Bob is your uncle, as the Brits say. But we don't observe that. We don't observe that. Remember, this curve, this is why it's a much better predictor than, say, the stock to flow curve, which is based on, it has influence of the exponential emission of Bitcoin, which I've talked about in many videos. This curve, the power curve, simply based on price, has been in this trajectory since 2016. I first posted about it in 2018, but in 2016, this black line has more or less been in the same direction. And of course, we can't say that about the stock to flow models. Here's Plan B's 2019, 2020, looks more like an exponential curve. I've done a random one, which actually, Plan B only took in one stock to flow for gold, one stock to flow for silver. Again, you can't do that with a model because gold and silver come out of the ground exponentially. Bitcoin comes out of the protocol in power. So they're apples and oranges comparisons. But you can see the red line, the red or the blue lines, it doesn't matter. They look more straight. All right, not just the staircase, but you can see that they kind of look more straight overall. Even mine that I'd really tried to fit, or I didn't even try. I just took 16 different gold stock to flows, 16 different silver stock to flows, 18 different Bitcoin stock to flows. You can see that it's a very poor model because in the past, it doesn't fit it at all. My number 5, see, it's way over the price. No, it's no good. And all the Plan B models as well, they're relatively straight looking. That's because Bitcoin's emission, all right, the halving every 4 years, that is an exponential function. I've talked about this before. But what dominates is the adoption. What dominates is the power. So emission, price, market cap, ounces out of the ground in a total supply curve. For gold, silver, everything else, that's exponential. The default is exponential. It goes to exponential. For Bitcoin, it's much more complicated and nuanced. The emission is exponential decay, the decline in the emission of new coins every 4 years. The curve itself, when you add all that exponential decay up, it will take a logarithmic type look. Okay, when you have that declining asymptotic look of the Bitcoin supply curve. And then, of course, if you observe how the trend is on price or on market cap, Bitcoin has a power function, So unlike gold, silver, oil, every other asset in the market, which move in exponential, Bitcoin has 3 different statistical regressions that fit different things. The emission is exponential decay. The curve itself, that supply up to 21 million coins, is logarithmic. And then the price and market cap curves, the thing that dominates adoption, that's power. That's what you need to think about to break it all down. So that's why something like stock to flow, which has what dominates in there is the emission. All right, the x-axis becomes not time, simple time, but it becomes the stock to flow value. So depending on which slope you put in there, you're going to get this stair step. You're going to get something that, it can be quite subjective. And as we see from the different models here, it is subjective. I wouldn't recommend any 3 of these to think about what Bitcoin will do. So that's my little soapbox, I guess, for that on the day. Funny, Fanny's your aunt. Yes, indeed. S&P 500 grows as exponential, not log, exponential. I should do a chart, Cronus, with the S&P, gold, and Bitcoin. Actually, I can show you one. I can show you one right now. Let me pull it up. I can't remember where I put it. I need too many things here these days. All right. I'm going to show you gold, silver, and Bitcoin in market cap form. Market cap form. Remember, Bitcoin has 3 different curves, but it moves around different things. Okay, so the Bitcoin emission is exponential decay. It halves every 4 years. When you stack those emissions up, you get the Bitcoin supply. That's logarithmic. All right. But when you analyze the market adoption, price and market cap, those 2 things are power. So Bitcoin has 3 different regressions depending on where you look at it. Gold, silver, the markets, everything else, doesn't matter which way you stack it. Price, market cap, emission, supply, all of those things are exponential. Always exponential. What does that mean? It means we put this on log scale. I got gold market cap, silver market cap, Bitcoin market cap here. Gold and silver will turn into straight lines because an exponential function is a straight line on log scale. Bitcoin will retain this gently sloping power curve. You ready for it? This is gold, silver, and Bitcoin, market size, market cap. Here it is. Linear scale, log scale. Exponential functions turn into straight lines on log scale. So this is why Peter Schiff was, scamming people for 10 years, saying that gold's going to explode to, $500,000 an ounce or whatever, when gold does not come out of the ground at that function. And nobody's demand for gold would ever turn into that function based on the utility of gold. Gold follows a very simple exponential curve of 1.8% per year, a little bit higher in dollar terms, all right, if you slap dollar bills on that, because dollars inflate more. Silver inflates at a stronger or lower compound growth of about 1.5% per year. Again, higher if you slap dollars and get the market cap value. Bitcoin has a very completely different thing. So Bitcoin is power. That's why, again, this should settle, even this picture should settle any debate on why Bitcoin is power and not exponential. Just look at this. This is from the beginning of Bitcoin. This is how gold has grown, silver's grown. They're straight lines on log scale for gold and silver. And by the way, it doesn't have to be straight line across, because that's just because Bitcoin is, it's just let me take Bitcoin off and you'll see how it will change. There. The slant is better here. It would be a stronger looking slant for gold and silver if I went back to 1971. All right. But it's a gently sloping exponential curve, which on log scale is a straight line. There's gold, there's silver, exponential markets. You cannot tell me that the Bitcoin market is also an exponential market when the best fitting trend line looks like this. Bitcoin is power. Gold and silver, straight line on log scale. Bitcoin, gently sloping curve on log scale, means power. And by the way, how do you determine which is the best per each asset? You just look at the R squared. I mean, I know that statisticians, again, I'm applied statistician here. I don't go too deep into the details. I know that R squared can have its pitfalls with certain models, but generally there's nothing that comes close to each asset as far as R squared. Okay, so which would show you which fits best. So for gold and silver, by far the best R squared, and you also can just use your eyes. All right, this is the market cap of gold and silver. All right, we started. Let's explain now that I've harped on it. Let's take off Bitcoin for a second. The gold market was, 15 years ago, actually 4 trillion. The trend 3.7 trillion. Silver actually 300 billion. The trend about the same. Okay, 15 years ago. 16 years, whatever, 16, 17 years ago, back to the beginning of Bitcoin. We had big booms in 2011 for both gold and silver, but we went back to trend. We went sideways again. Peter Schiff was just scamming his clients, saying that Bitcoin was, on some unsustainable trend. Now we are ahead of trend. Okay, so it's great. Good on gold and silver for being ahead of trend right now. A traditional asset that, as we know, central banks around the world are stocking more of. They have been buying more gold since 2008. Not silver. It's true. Silver has no value in central banks. There is some silver in central banks, but it's not much. So now, $15 and a half trillion dollar gold market cap, silver 800. All right, so what do? It took us 15, 16 years. We went 4x roughly on gold in 15 years in dollar terms. And in silver, we went 3x. And yeah, so to elaborate on your comment, Cronus, the S&P curve would look the same. Right? It wouldn't be the same in unit value and dollar value, of course, but it would look like a straight line on log scale. These are exponential trends. The exponential trend dominates for these assets. It's unquestionable that an exponential trend dominates. It's not about like what you think your purchasing power is going to do or whatever. I mean, it's just what happens in nature. All right, the stock market goes this way, gold, silver, oil. Even population growth worldwide goes this way. Whereas Bitcoin has a more gently sloping curve. As I've explained, what dominates is power. The 96% R squared there. And again, if we, I took it off. Hold on. Let me go back to my stock to flow figures. So Bitcoin power dominates. All right. It's clearly a power curve. All right. You see the actual price or market cap. And if we go to this model again, which put all the different models in, let's take everything out. Remember, stock to flows are just modified power curves. Right? They're exponentially influenced, more highly influenced by the exponential emission, but they are power curves. Still a power curve. Now, when you just go very, very simple, one independent variable, one dependent variable, time is your independent variable, price is your dependent variable. You run a power trend. This has got this beautiful 96% R squared, basically right on target. Exponential, nonsensical. All right. I mean, it's amazing. I would love it to do that over the long term, but there's just, Bitcoin's got to prove a lot if it's going to go exponential. And I know, trust me, I know the FOMO. Like I will not be complaining if Bitcoin is really exponential. But based on the math, based on other available indicators that we have, it's not possible that Bitcoin could be on an exponential curve. Another reason I say that is networks themselves grow in power. Okay, so even though, let's compare it to population. The world's population is exponential. It can go up or down roughly 1.5% per year. It can be 2% per year. Now it's like 1.7%. I don't know. It depends on your time scale of your curve, but it's decreasing in value. But of course, the curve itself is still exponential. It might flatten. It might steepen. It's flattening now, but it's a straight line on log scale. World population is exponential, but city population, and sort of city infrastructure works in power. Okay, so you don't have like parking lots exploding into the sun in cities, or people just building skyscrapers to the sun in cities, like the science fiction novels say, because the whole infrastructure doesn't need to do that. Less people drive in the cities, more people walk, more people take public transit, More people have smaller apartments than big sprawling houses in cities. So the growth of cities is actually much more constrained, like power. It is power for city growth compared to the worldwide growth, which is not the right word to use, but an unconstrained, a constant exponential curve. Great book, Scale by Jeffrey West. To give you more details on that, it's called Scale by Jeffrey West. You can read more about that difference between exponential and power. But this is, I think, at the end of the day, the brass tacks of what you got to think about when you think about where Bitcoin's going and what it can do. Is Bitcoin is a network. It's being adopted worldwide. It's an unstoppable, unconfiscatable, most pure collateral imaginable, more pure than gold and silver. Highest utility as far as medium of exchange. So it's going to take time, even though I imagine, dear viewer, you and I want to stack as many sats as we can every day. And we might want to try to time tops and bottoms a little bit for lifestyle or whatever. Again, caveat emptor, caveat emptor. What you are seeing now, I think pretty much firmly established since 2016, is an identical black line that has not changed since 2016. So this black line since 2016 has been pretty much the same. So you're seeing a network that is adopted in real time. It's like we saw it with the internet, but with the internet, it was harder to quantify. You could quantify nodes and servers. Again, networking is power function, by the way. With networks, there are many, many small nodes. All right, numerous small nodes with few connections, and there are a few large nodes with many connections. That's a power relationship. So networks are a perfect example of something growing in power. Why would one be surprised if the Bitcoin network did not also grow in power? By the way, this chart also shows us where we meet gold's exponential. So let's take off the log. You can see here, gold grows in exponential. You would think exponential growth is like, explosion. We're going to go in amazing. Peter Schiff is going to tell you gold is going to go in, $500,000 gold price in 2 years. It's a gentle, slowly growing exponential curve. Whereas Bitcoin, look at the rocket ship that Bitcoin is on. This is market cap. We've already passed silver in any way possible. We passed it last year. This is available silver, by the way. It's a double for if you include industrial silver, which is non-investable silver, which you shouldn't include, which is not on this chart. Silver would be like $1.7 trillion, something like that, $1.8 trillion. So Bitcoin has already passed $1.8 trillion, right? It's a $2 trillion asset. So Bitcoin's passed silver as of last year in every way possible. This is the trajectory to pass gold somewhere by the end of the decade. Maybe by that next halving in 2032, fully for sure. These are two exponential curves in gold and silver markets and one power curve in the Bitcoin market. The gold R squared is 87%, silver 61. Not a great R squared, but there's nothing better. So again, though silver is a more volatile market, it's industrial influenced, all the rest. And by the way, actually, it's better over the longer term. I think this is only since 2008, so that as well makes it not look as good. But we can extend the days back, and you'd see stronger R squareds. In any event, look at the R squared of Bitcoin. 96% on Bitcoin market cap. It is a wonderful R squared. It is a beautiful R squared. All that means, by the way, is that Bitcoin moves around the price 96% better than it moves around the average. That's what it means. With 96% less variance. Let's take off these here. So even though this seems like a wild curve on linear scale, the market cap moves around the black line 96% better than it would move around a straight average line in the same time period. That's another way to interpret R squared. So, gold, silver, Bitcoin, log scale, straight line for gold and silver. That means they are unquestionably exponential markets. Look, I got the trend. Let's take off Bitcoin. I have the trend and I have the real values in dollar terms. They obviously move in correlation. They move together. It's clear that, gold is not on some secret different exponential trend at the moment, no matter what Peter Schiff tells you. These are simple exponential trends. But they're not strong exponential trends relative to Bitcoin. Bitcoin is a strong, new, once in a humanity asset that is now being adopted worldwide. It's on a power trend, as networks move on a power trend. And that power trend is going to give you this nice, beautiful curve that doubles. All right. Remember what I just said about the website, which you can look here. You can find this on my website, last column on charts. The charts, the only chart I have up at the moment with this new website. I do not have the PSR up, but I'll get that up soon. Bitcoin's, remember, market cap, price. What this means is adoption, not really protection of purchasing power at the moment. If it was, Peter Schiff would win the zeitgeist. He would win the public debates, but he obviously doesn't. He's lost them for 10 years. What the power curve tells you for Bitcoin is that for every 12.5 increase in days, all right, in an expansion of Bitcoin's network life, it doubles. It doubles. So you can call it price, you can call it market cap, you can call it adoption. But at the end of the day, the formulas all crunch back into, for every, a 10% increase in the life of Bitcoin here, when Bitcoin itself was very young, is a quick doubling. All right, it's a very quick doubling. Where's the market cap? Here we can get to 100 million. This is in billions. So $100 million market cap is here. All right, August 2012. When do we get to 2? January 2013, even quicker. August 2012. What was December? Yeah, December 2012, $150 billion Bitcoin, $200 billion by January 2013. So a doubling every 4 or 5 months. That's what the power curve is explaining. Is it a doubling of the protection of your purchasing power every 4 or 5 months at this time? Does anyone actually think that, the crazy anarcho-capitalist libertarians that are correct, they're directionally correct, 100%, but theoretically, is this curve telling you that this is like them watching out for the world's purchasing power? Certainly they have their ideological views. I have my ideological views. You do as well, I'm sure, if you're a fan of Bitcoin and watching this video. What was happening here was way bigger than something just like protecting your purchasing power or a speculation. Certainly there's a speculation, but what has been happening and solidified by 2016 is the point, is the growth of a network. This curve represents the growth of a network, the adoption of a network. So it could double every 4 or 5 months back in 2011, 2012, quicker in 2010. The network was doubling. And of course, you see this you can run power curves on address growth, node growth, hash rate growth. They're all power. They all dominate to power. They default to power. Power dominates, I should say. Almost every curve in Bitcoin is power, except for the supply curve itself. That's logarithmic, which is an extension of exponential decay, emission of coins halving every 4 years. As I've tried to say, there's a little bit complications there. It's not, it's not like gold, silver, where everything defaults to exponential. With Bitcoin, most of the things default to power, except it is true the decay of coins every 4 years is an exponential function. That's true. The halving of coins every 4 years is an exponential function. It translates into a 16% loss of coins on an annual basis. All right, 16% loss of new coins, of new issuance on an annual basis. That's what it means in exponential terms. All right. It's a 16% loss of coins when you went from 50 to 25 to 12.5. That was a 16% loss in emission, decrease in emission every 4 years, exponential basis. That's an exponential function, all right, exponential decay. But when you add those up and you stack them up, that's a logarithmic curve. All right, so the native curve of Bitcoins is a logarithmic curve. But then when you put it in dollar terms, which shows you the market, it shows you the adoption, that's power. And it's undeniable that it's power at this point. Again, I first posted about it somewhere here in Twitter, actually here, December 2018. Giovanni, the big power law supporter, as he calls it, he posted somewhere here, September 2018 on Reddit. He did post some things about power, I guess, back in 2014 on Reddit as well. I wasn't on Reddit. So I found it out just by using Microsoft Excel. It's not that complicated to find, really. I'm not saying it's something groundbreaking, but more people, I think, have gotten on board as the years have gone by. Best shout outs, of course, to the best Bitcoin data group, Plan C and Cena and Smithson and these guys, Fred Krueger. It's clear, I think, that what you're seeing is adoption, and you're seeing relative to gold or silver, it's of course not only a faster growth rate, of course it's faster, but understand it's power on log, on a log scale. This is just log linear. On a log scale, it's a straight line. So if you go back, so there's the market cap. Again, I don't think you can unsee this, frankly. It's just clearly what Bitcoin is doing. And if you go back to this chart where you compare Bitcoin itself to an exponential price growth, that curve also doesn't fit. All right, it's not predictive. It's not predictive. And when I say predictive, I don't mean in a make money term. I mean in a statistical term. I don't mean, we can predict the future. I just mean statistically. You're way out ahead. If Bitcoin was growing exponential, if Bitcoin was growing like gold and silver and stocks and bonds and oil, it would be hovering around this dotted line, much like gold and silver hovers around that dotted line. Sure, you can go way up over time, but if I showed this out over 50 years, which I've done plenty of times, you'll see that it hovers around this line. We've had enough time in Bitcoin to understand that this is not a predictive thing, exponential growth for Bitcoin, because we've been off of this trend, so to speak, off of the trend from 2022. Much more predictive, much more commonsensical would be being on a power curve, which is how networks grow. It's how cities grow, how nodes grow, how many things in nature grow. So, though I would much love to have $15 billion Bitcoin by 2038, I don't think it's going to happen. Could be wrong. Never say never. Never say never. But, can we settle with $3 million Bitcoin? That's the power curve prediction, number one. All right, guys. going to have to run soon. I just wanted to get this out for a Friday. This stock to flow, no, sorry, not stock to flow, price to sales model. I'll get up on the website soon. This is probably the best original to me, at least. Yeah, let's say original to me that I've put out there, and I'll get that on the website soon enough. Where if we trust this curve, all right, we can double. We can double again before a blow off top. But again, that portends a lot of other factors. Never financial advice. And I guess I'll leave it from there. Try to not unsee the power trend. Try to understand it. It's on my website. You can find, interact. I know my charts on the website, by the way, aren't as good as here. It's simply because it'd be overwhelming for me to put them all, and I'm not a good enough coder yet. So I just got a few, and I'll get more up there. But I know it's different. You can't zoom in or whatever, but you can see it. You can see the same things that I'm showing you, basically. Some trend lines, log, and then the tables actually will really show you in hard data how things look. If you go down to this table, you see here the actual compound growth rate that we're running at. And for Bitcoin, moving into 2025, we've gone from 45% per year compounded down to, by the end of this year, it's going to be 42% per year compounded. But very slow decline, all right? Gold, silver, oil, these are, a couple percent a year over the long term, compounded. As far as coming out of the ground in dollar terms, it'd be a little bit more, 4 or 5% per year compounded growth. In native terms, only 1 or 2%, less than 2%. Stocks, 9% per year compounded if you reinvested your dividends over a 50-year horizon. All right. Bitcoin, to get down to 10%, by the way, this would take over 100 years. It'd be actually 200 years. 200 years. I should revisit that in the future just to show you guys a chart. A long time. So don't think that, don't scoff at this 42% per year compounded power trend like you can get more on Sol or something. Yeah, never financial advice, but there's some strong market effects going on here. The guts of the protocol. So that's what I'm trying to put into words, put into numbers. All right. Thank you, guys. Have a great weekend. Let me know any questions in the comments, and I'm happy to try to draw any chart you like. Take care.